This is Accounting 1. We are on Chapter 8, Section 2, and in this section we're going to be talking about recording closing entries. So in the last section we had taken our adjusting entries that we did on our worksheet in the trial balance columns, and we actually posted those to our journal. We've journalized them so that then we're going to be able to take those and post them to our general ledger accounts. But now we have to close some of our accounts. And basically what that means is you have temporary accounts and you have permanent accounts in your chart of accounts list. Your permanent accounts are those used to accumulate information from one fiscal period to the next. Permanent accounts can also be called a real account, and these include assets, liabilities, and owner's equity account. Your cash, of course, you want that to be a permanent account. You don't want at the end of the fiscal period for your cash to just go to zero. That would be a bad thing. So a real account or a permanent account just goes on like normal. What we're going to be working on is our temporary accounts. Temporary accounts will hold information for a temporary period of time, and then you will close them out to zero so you can start the next accounting period. For example, sales, you always start your fiscal period of sales with a 0. Then you add all your sales into it for your fiscal period, and at the end you're going to actually close it out so it's 0 to start the next fiscal period. That way you can see if your sales ran on forever and ever and ever, you wouldn't be able to look at it and know what were my sales for this month or what were my sales for this year, because they would all run together. So that's why we always want to start that with a 0. We also want to start all of our expenses with a 0. So your temporary accounts are your revenue and your expense accounts, and also your income summary. We're finally going to use that account in this chapter. So to close a temporary account, we use a journal entry to do that. And that way it's going to take that account down to 0 so that we are ready to start our next fiscal period. The concept for this is matching expenses with revenue, meaning we want the net income for the next fiscal period to be calculated using just the revenue and expenses for that fiscal period. So we're going to start with closing our accounts. And when you close your accounts, you're closing them to your income summary. So that's what the income summary is there for. If I wanted to take my revenue and I wanted to close it and make it a 0, I would have to do something to another account that was opposite. And so that other account that I'm using is my income summary account, because we always have to have a debit and a credit. So we're just going to start together with our notes. And I have just opened up a journal that we started in Section 1 where we did our adjusting entries. This is the same journal page where we're going to do our closing entries. And so what we're going to do right here is we had our title up above for adjusting entries, and that was centered. So now we're going to write closing entries in your account title. And we're also going to center that. That way we know that this is where all of our closing entries begin. Our closing entries are also going to be dated the last day of the month. And so we've already written August up above. So here all we have to do is put the 31st in. And we're ready to do our first closing entry. The first thing we're going to close is sales. So the first thing we're closing is our sales account. And our sales has a credit balance typically. So if we had a credit balance of $3,565, in order to get that credit balance to become a 0, we're going to need to do a debit to sales. So I'm just going to put sales. And then I'm going to come over and do a debit balance of $3,565 because we typically have a credit and we want to make it 0. So if I've had a debit now, I have to credit something else $3,565. So that something else is going to be our income summary. And I'm just going to indent this just a little bit so that we know for sure that those go together. And that's going to be my credit of $3,565. Okay, the next thing I'm going to close is all of my expenses. Now, if you will look at a worksheet, at the income statement column for your worksheet, all of your expenses are listed as, are they a debit or a credit? Right, they're a debit. So in order to make them zero, if we have a debit, we have to subtract, and you subtract a debit using a credit. So on this one, we're going to need to credit all of our expense accounts, and so we have to debit something. And when we're doing our accounting journal entries, we always list our debit on top. So that account we're going to use is income summary. So I'm going to type my date of the 31st. I'm going to list income summary, because that's what we're going to be debiting. I don't know my amount of my debit yet, so I'm going to come on down here, and I'm going to just type in all of my expense accounts, indented just a little bit. So my advertising expense. And remember, all these are going to be a credit. And just go ahead and pause the video while you type in all of your expenses. Okay, now that we have typed in all of our expenses and whatever their current debit balance was, we've entered those as a credit. We're going to add up our credits because that's the amount of debit we need for our income summary. So since I'm doing this on Excel, I'm going to show you how I would do this in Excel. You can use your calculator if you like. Get my ribbon back here. I'm just going to hit auto sum and choose sum because I'm adding. It's going to say, what are you wanting to add? So then all I have to do is highlight my column of information that I want to add and press enter. Okay, so now I have closed my sales, which is my revenue, and I have closed all of my expenses. So those are all going to have a zero balance. So, but we've put things into our income summary. We've put in both a credit and a debit into our income summary. So the next thing we have to do is we have to actually close our income summary account. And the account that we're going to close our income summary to is going to be our capital account. The first thing we have to do is figure out how much we have put into our income summary account. So to do that, so to go ahead and find out what our income summary is going to be, I'm going to look up here, and it looks like I have a credit of $3,565 and a debit of $1,466. So with a credit and a debit, I'm going to subtract, which is going to give me a credit balance of $2,099. Now I can double check that $2,099 because if I look at my worksheet, my net income should also be $2,099. So your income summary account balance and your net income or your net loss should be the same. So if I'm looking at my income summary or my income statement or my net income on my worksheet, I have a debit of $2,099. So to cancel that out, I'm going to need a credit of $2,099, or if I take this credit minus this debit, I'm going to also need a debit of $2,099 to get rid of that. So this is the 31st. And we always list our debit on top, so we're going to list income summary first. And it's going to be a debit of $2,099. And I'm closing that out to my capital account. So it's Kim Park Capital. And that will get my credit of $2,099. So now my income summary is closed. Sales is zero, expenses are zero, and my income summary is zero. The only thing we have left now is our drawing account. We need to make our drawing zero so that we know we start off the new fiscal period with zero in the drawing, so we know how much money we take out during that fiscal period. And also that way our capital account shows the true capital we had. when we were working on our financial statements for our balance sheet, we went ahead and calculated that capital account by subtracting out the drawing and adding in the income summary. So these two closing accounts are going to be also doing the same exact thing. So the date is still the 31st. Drawing has a normal debit balance, and if you look at your worksheet in the balance sheet column for drawing, you'll see Kim Park Drawing had $625 debit, so we need to make that a credit. We always list our debit on top, and so we're closing our drawing to our capital account. So this one's going to be Kim Park Capital. And the amount of my drawing was $625. This one will be Kim Park Drawing. And it will be a credit of $625. So now we have 0 in our revenue, 0 in our expenses, 0 in our income summary, and 0 in our drawing. So that concludes our all of our closing of our accounts. So you're going to go ahead and on page 212 in your textbook, you're going to do the work together. And if you watch the next video, we'll do that one together. I'll do it with you. And then your homework is going to be to do 8.2 on your own and then to do application problem 8.2. And you will notice that you're doing all of these on the same pages that you did the 8.1 assignments on. So I'll see you in the next video.